right and everything? Can you hear me all right? Great. Okay. We'll just wait a minute here and see if anybody else joins. Hope you're doing all right today. Just give it one more minute here. Hey, John. How you doing?
Hello.
All right, we're just going to get rolling here in a hot second. This might actually be a relatively short call because it's really only like 2 paths to go. so, so instead of discussing like multiple alternatives here, it might just be a relatively easy discussion here. So let me pull it up. It kind of helps when you guys were on the last week's one, because then it's easy to track with kind of where we're at. One second. Trying to figure out. There's like on Google, on this thing here, it's like I have 2 monitors, right? These giant monitors, and I have all you guys are on the like rightmost corner of my other monitor over here. My charts are over here, and it's like I can't see you guys unless I could try to figure out how to flip it. But it might just be a one-size-fits-all approach here. But all right, that's fine. Anyways, so anything in particular you guys wanted to cover, like specifically here? I know that you guys have had some questions about like MSTR, and I definitely want to cover that, and definitely like Bitcoin. But is there anything else that you guys wanted to cover specifically? Okay, cool. So I guess I'll just do my thing. All right. So what we're looking at here is regular, just the regular the Nasdaq. So last week what we were talking about was something sort of like this, where we had this big we were actually talking about something like this, where we get some sort of pullback, and then we would get some sort of wave 4 and a 5 here. So what's changed is last night. So what had been, and I'll do some measurements here for you guys to kind of see what I'm talking about. And really it's just to kind of follow the logic behind, what some of the calls are. So basically what I was thinking was we would have this sort of, kind of bounce point right here. So there is the possibility here, or there was the possibility, and I think we covered this last time, where like this almost might not have been the end of the third wave, and we could have had something like this where we just have a quick little pullback, bounce on a trend line, and then we have another sprint up higher. But I think that's kind of invalidated now. So the original call here was, okay, this is impulsive, so we should be able to see. One second here. So it was like, oh, we should be able to see, this bounce here at the wave 4, and even if it hit this wave 5 here, it would still be, this 50% pullback, it would still be kind of fine. But what ended up happening yesterday was, right at the end of the day, it kind of sold, and it was like right at this wave 4 level here, and then after close, that's when it just dumped. I watched the whole thing last night because I'm a nerd like that, sitting in front of my computer. But well, it's on my tablet, whatever, it doesn't matter. still, I had it right up, and I wanted to see what was going to happen with this. So what was interesting is that there really was no like bull enthusiasm to try to catch this dip, and like you can kind of see down here that there was just a ton of volume last night, and I do think this was going well. Everything's on purpose, but the purpose of last night, I think, was to break this sort of last this last sort of wave high. So what I was trying to say today, and I don't think I did it very well, but what I was trying to say today in my morning post was that this is sort of like the wave 3 of the longer term, sort of setup, and we could have like a larger sort of wave count. Now I'm not sure what Alex is saying right now, so if anybody wants to chime in and let me know, but I know that he mentioned something about still being bullish because we're above the 21-day moving average. However, I think that that's sort of like a temporary thing. I think what the next path is going to be a little interesting. But originally, I kind of thought that this would be sort of our path up here, but that's not really looking like the case. So the big differentiator here is this tiny little section right down here, and once this breaches this this like last wave 1, 2 sort of setup, then technically that invalidates the bullish setup, at least from like a wave counting perspective. Now I know that the options data drives a lot of this a lot of the markets these days. So that's why I also like to post in the options channel about 0 to DTE and things like that. And as the day rolls on, the picture kind of changes. But the wave theory still makes a big impact because it's like a forecast of what's going to happen here, and there's different scenarios. So understanding how the theory is applied, we also have to combine other things with our indicators. Like we need to make sure that like let's say elevated RSI is important. Oversold is important. People use oscillators, different trading mechanisms, but what I found over the years is that wave theory is still very much is very much used in order to forecast like shorter term movements and also longer term sort of things. I mean, it is built into these algorithms. So I guess the easiest way to say it is what I'm looking for now, once we've had that breach, is now it becomes like a corrective sort of move, and that's where I think we are going to see something sort of like this, where we'll have like I'm not quite sure yet if we had the top today. The bulls came out swinging here, but I think we will see something sort of like this. And the reason is, let me see if I can, I don't have my 50-day moving average here. See if I can do it on the fly. See if this works. Oh, nope, that's not it. Let's do 50. Well, that's not it either. Okay. All right. Better be prepared next time, Gaines. All right. So anyways, on the other chart I can show you. Just get my act together here. So if we kind of distill this down here, this is what I was posting earlier today, where we had this, I think Don actually mentioned it earlier today, where the last like October 30th low here, that giant stab down that we had with the big volume, that's where it typically doesn't survive very long above levels like that, especially if it's going to be a corrective wave. So we might see just a little bit of a creep up here. Like we might see, even though I do think that this is going to still stay like corrective like this, it's still going to be like an ABC up. We might be on the backside right now. So today kind of looked, I think I mentioned it before, looked kind of like a bull trap, like bull trappy, I guess you could say. And the reason I think that is because, you can clearly make out like, 5-wave patterns and things like that with your, sorry, I'm jumping around a lot. You can clearly make like an ABC out of this, and you could make the argument that we might see something like this and head up here, and it is still bullish, right? Like I can't deny that. There should be some sort of trend line test here. So I think that, if short term we have like a, I would say this is probably like the bullish scenario. Here, let me highlight this for you. And if this doesn't make sense or I'm going too fast, let me know. So I kind of think what we might see here is that this would be the bullish scenario, like the surprise. We get a dip to test low, bulls step in to go save themselves from, all the buying they did today. Very high volume buying, but, was still getting sold into. So if you do see something like this, I don't expect it to last very long. I think that what you'll see is a hold here at around like this, 25,835 level. If you look at something like the S&P, you'll notice that it bounced right. This blue line here is the this is the 21-day moving average. So it bounced right off that, just like Alex said, still holding. But what is a little concerning here about, just going bear right away is that, we did have a breach of this like 50, the 50 percent retracement level here. But what is interesting to see is that if this doesn't, if this bullish scenario doesn't happen, we could get like, let's say, a inverse head and shoulders, that kind of thing. And this trend line is kind of, this is like a long-term trend line. So if you do see some sort of, bullish buy up, something like this, I mean, at least you'll get what is that, 100 points, about like 80 points, something like that of a delta, where you could make some money on some scalpers if you're short. But the only thing that I'm cautious of is that there was a lot of buying, and there's going to be a lot of defense of defense of those levels. So for now, let's just call this, with the S&P and also the Nasdaq, let's just say that this is the bullish scenario for now, where we may have this very, could have a pretty violent dip down quickly, and then it could get bought up again. But again, what's really kind of piquing up my interest here is that there's a lot of high volume selling that's been happening, and this is really just, bears trying now to move the market. Before, it was just distribution. Can't talk. You're seeing stuff like this where it was very grindy. You'd sell down 50 points, and then the bulls will buy it up, and rinse and repeat for the last couple days. But now I think what's happening is they're now trying to move the market and pick things up. So with that being said, so let's make the assumption here. Let's jump back to the other chart so it's a little cleaner. So let's say that that bullish scenario is, let's say it doesn't really happen. Okay, let's explore the other side here. So the other side is, oh, sorry. You guys have questions about the bullish side? Like, is it making sense? Does it, I mean, you could even have, I know it's not helpful to speculate, and do all the stuff and things, but you could even have a high sort of B wave retrace like this. But the higher you go, the more likely it's going to become like a 5-wave down, which is a setup for a much larger correction. But I don't know if that's really going to happen here just quite yet. We'll see. So it's always like bulls buy too early, bears sell too soon, and that's just how it goes. And I mean, lucky for some of us, let's say you're holding shorts, up top here. It's very possible that, I mean, and again, today I was thinking this is going to be like a 5-wave down, but since this level broke here, this like 25,700 level, there's not really, it kind of invalidates the whole case. So now I'm thinking it's more of like a, like an ABC kind of thing. Even though there's a lot of volume up here, a lot of buying, I think that a lot of the bulls got out of those positions up here. So that's at least, like, I'm just speculating, of course. And typically, if you have like a B wave and ABC correction, you'll get reversals at 50% or the 61.8% level. Sometimes you can head a little bit higher, like this thing I was just showing you guys before. But for the most part, I think it's this is why it's kind of, so it's going to be this or it's going to be that. It's going to be that bifurcation sort of level. So just kind of zooming in here before I go into the the bear scenario. Again, I don't think this is going to happen. I think what you will see tonight is maybe like a, sorry, I'm gonna add some contrast here so you guys know what I'm talking about. I know I'm going fast, so please, it's just what I do. So I think we could see like a series of these ABC sort of corrective waves down. And we kind of saw that up here when this first started. Even though this did start with a 5-wave down, you could still, do the counting and it could, you could still make it fit with ABCs, but you can only really tell that in hindsight. So you just have to know like what the rules are. It's kind of like an Excel thing where it's like, if this happens, then this happens. So that's kind of where, I step in with some of the different calls where like I'll update if like something gets invalidated, which today it did. So, it could have been right. And if that would have been right, that would have been sweet, but it was not. So now we just have to wait usually like another day or two for, these guys to kind of show their hand a little bit. And that's what we're waiting for today. So we might see this overnight here and then into tomorrow where we see this sort of, like deeper cut, and then bulls bite up here. We have some support. And this is sort of like, this happened like right in the morning. This was, I was watching this happen. There wasn't a lot of volume. This isn't really significant. What was significant was down here, and that happened, that happened last night. There wasn't really a lot of buying right away. It was almost like the bulls were seeing how far they wanted to push it down. So anyways, this is the sort of like the conclusion here about, the bullish scenario where you can see a deep cut. You can even see a little more of like shallow cut. But I still think that this is a plausible scenario for sure. The bulls still want to keep, trying to drive up and make all-time highs. But the one thing I do not think that'll happen is I do not think that this will turn into like a 5-wave up. You could see it, but this, in my opinion, this would be very short-lived. This would be the test of this trend line, but which, you do have to back test this trend line, and I kind of think that that's what happened back here yesterday. So I kind of think that maybe, this is not realistic, and also the counts don't really, line up. Just historically speaking, I don't really see this very often, where you have weird alternations. But anyways, long story short, I'm expecting at least something where you have a pullback like this. So, something down to this like 25,400 level. And if you're looking at the S&P, I do think that you'll see, it's actually a little bit easier to read on the S&P, I think. If you look at some of this volume, there's a pretty decent volume shelf up here. And if I zoom in, it might look a little easier. But that point of control was like right around here. And this whole level here is kind of like support. So again, you could see something like this where it, surprises everybody and it retraces a lot higher. It is still a very bullish, market. But you can kind of see that's fading a little bit, right? Like it's kind of getting a little weak. So you could see this, but this would be a good spot. Let's say like take some profits on shorts if you have them. Like if you added some shorts earlier or like late in the day. Like for me personally, I added some with my like fund money account, just like 2 puts, nothing crazy. And I did it for like, 30 days. So, if it doesn't happen tomorrow, it's not that big of a deal. But if you do have shorts, I would say like consider, taking some profits here, because likely you'll see a bounce. And either bullish or bearish, both scenarios will likely bounce around this area and kind of go back to the Nasdaq, where I think is kind of the leader right at the moment. It's the same sort of situation where you get a lot of this buying down here. So like this is kind of like you call it like a volume shelf. So where this B level is, that's where I would, let's say, close shorts, and then if you see a bounce, very likely. Again, this is a bearish scenario. I'll go through that in a second here, but you could see something like this and like a continuation. But if you close the shorts here, then more than likely, you'll be able to re-add those up here. So what you could do is you could get some longer term shorts or something like that, or you could take out like a spread. You could do, a number of things to kind of play both areas. But the one thing I would caution with is, you can clearly see there's a lot of selling up here. So it's like these deep red bars. That just means that this high sell delta. So that means that there's a lot of selling versus buying. And even though there is a big point of control up here with a lot of volume, I still don't think like that would act as resistance in this case. So that's why I kind of think that that bullish scenario is, it's a little too early to tell. So right now I'd say like I'm 60-40 bearish right now, and this is kind of what I'm thinking we might see. So any questions about the bullish scenario, forecasted probabilities, any sort of stuff like that? Hopefully I made sense. I really want to make sure I make sense because I don't think I make a lot of sense. Okay, well, as long as you guys are enjoying it, that's half the battle. Okay, so what's really weird about this, guys, is in all my wave forecasting days, I'm a lot older than I probably look. Camera, adds 10 less years or 10 more pounds or whatever they say, but probably both. But anyways, what's really weird about this is that we kind of stopped short of this new little high here, and it's been kind of bugging me because it's like you don't have any resolution. And when you kind of zoom in here, you can make out this could be like an ABC sort of thing, and this could also be like a 5 wave. And there's nothing that can, there's nothing that really could invalidate that. I think that this is, it's something that's possible. But again, it's something that it would be like a very short-term sort of bullish scenario. I think a lot of people are waiting on the Supreme Court ruling on the tariffs, or at least like, or arguments or whatever. And I think a lot of that was sort of planned around the selling last night and the buying today. Because again, if you're trying to sell, like why sell low when you can sell higher, right? And that's that late stage market bubble where everybody's greedy, bulls and bears. So that's kind of what I was thinking here that we might see tonight. Is a little bit more of like a grind up here, and then maybe a tip over, but longer term. So let's take a look at what this might turn into. So if we do have this sort of last little leg up here, which I kind of think we will, but been wrong many times before. So I think that now that we kind of know that we've kind of broken the last peak here, so we've kind of got like 3 different things now that are pointing towards an ABC correction. And if you look at this, just incredible volume over the last, really since October the 29th, you really can't discount the weight of this. I guess you could say like the weight of this on the market per se. Sorry, my voice is a little weird today. But anyways, like the takeaway is, we could have a pretty decent cut, but not anything substantial. Let's say we do get this little tap of a trend line. Well, let me clean this up a little bit so it's easier to see. So, just freehand drawing this 24,660 level. This is pretty attractive for like an A equals C. So usually, like this extension level here. Sorry. So let's say, for example, we do make that tiny little high, and like we kind of test that. It's kind of like a double top in a mid pattern. Then you could see this sort of C leg here. And I mean, I don't know how long this would take. I think maybe a couple days, but selling's really fast usually. And then when you see these counter trend buy ups like today, those are typically like bull traps. But it's also like the bears selling into strength. So while the market is still bullish, they still want to use that to their advantage. So they want sell it down, wait for them to buy it up, wait them a day, sucking retail, buying all the dip, and then finally when we've done that for 6 months in a row, they're going to flip the script. And we've been waiting for that for a while, and there really has been a lot of distribution. But now you're starting to see cracks in the system, like Vicent this weekend. I was very surprised about this. Vicent came out and said, we're gonna, or some sectors are in recession, and usually it's like, okay, well, financials, housing, stuff like that, like kind of it's like home builders, things like that. They kind of get a little, get a little underwater here, relative to the rest of the sector. So like materials and utilities, things like that. Like those aren't really sensitive right away, but it's more of like down the road. So we'll see what happens. But when you get the Treasury Secretary coming out, essentially what they're doing is they're setting the stage to blame the Fed for everything, of course. But we already knew that was going to happen. So, and I know Powell knows it's going to happen. So to be honest, I don't really know. I don't think Powell is going to cut rates in December. I think that's going to be the shock that comes. And I think that eventually this credit risk is going to make a difference. So, again, Alex mentioned this, and I couldn't agree more. It's like every bubble ends with a credit disaster or some sort of debt disaster. And that usually happens just because of human nature, right? Like you get 100,000 for a loan, and then you want to make money off that money. So like you borrow other people's money, you lend it out to other people, and then the tracking with that just kind of falls to the wayside, especially if you keep making lots of money and you keep doing that for a long period of time. Well, then your controls and your give and takes, like some companies go bust because their business models suck or something like that. Well, it doesn't, like that doesn't really happen when the economy's raging, which is what it has been doing for a while. So, these things typically follow like these 18-year, 20-year cycle, boom and busts. So I think that the people who, and I've been thinking this for a while, I mean, and I've been wrong, of course, but it's still like you can't deny the fundamentals that underpin the economy have been strong in certain areas, but at the same time, you still have these compromises, or these sort of like, it's like Fed's kind of trying to thread the needle between keeping a lid on inflation, but I don't really believe the unemployment numbers. I think that they're, like you hear about all these tech layoffs, all these, you hear about these, about the immigration stuff and whatever, but like people can't find workers, but those are in like those low value sectors. Those people don't pay a lot of taxes, and like once tax revenue goes down, services go down. We have a government shutdown right now. People aren't making money and spending money, so you got to spend money to keep the economy propped. So it's kind of like once you get one domino, you can survive a couple dominoes, but once you get like 10 dominoes in a row, then you're kind of up the creek. So anyways, that's, my rant is over, but I've been thinking it for a while. It's just, the lesson that I've learned is that bubbles take so much longer to burst than you would ever think possible. And the people that were calling for some massive correction, like back with COVID, yeah, it was possible back then, but I do think that the Fed and the government injected a lot of liquidity in the system, and as you guys know, liquidity is what drives everything. So follow the liquidity and the money supply, and you can know long term where the markets go. All right, so to kind of summarize here, with this bear scenario, kind of wrap this up. If this this B wave here kind of tops, then I think you'll have a bit of an issue where you could come back down here and like you'll test this purple line is the 50-day moving average. And if you look at the S&P, so let me get all this stuff out of here. You guys should see what my charts look like during the day. It's a disaster. Okay, so if we do kind of pivot here, you're looking at something like 66.28, and that's well below the 50-day moving average. But also what's weird about this is you've got a trend line here that, very kind of like weakish trend line, but the 50's been pacing it. So I think there is a scenario here. It's called an overthrow. So from a chart perspective, you could see something like 65.80 being a realistic sort of ABC correction, and that might give us a lot more information on like what comes next, because this has been an upward channel for quite some time, as you can see here, and reaching that would be a pretty interesting thing, because you've seen, or like you can see on the chart here, how these days keep getting bought up as they test to 50. So I think retest down here where a lot of bears are trapped around like the 66.50 level. If you guys remember, we were fighting around that for a while. That area I do believe is going to be tested, probably sooner versus later. So do I know if it's going to be do I know if it's going to be the big one or whatever? I don't know, probably not. I mean, these things don't happen all in a day, right? But if we do look at something like this, I do think that there is a potential here for something like a Head and Shoulders longer term. So let's say you see something. Let me clear this out and just kind of illustrate. This is, I suppose, like the longer term bear scenario. So I guess to keep it short, what we'll do is, I mean, it showed you the bullish setup. It could reach decently high, but again, I'm kind of 60-40 bearish at the moment just because of the volume and kind of how the charts are looking. You could see this second. Yeah, you could see like a sell off to here, and then you could see one of these longer term sort of things here to make like a Head and Shoulders pattern. And I think in 2008 there was a Head and Shoulders pattern before it all tipped over. But something like this, and again, I say this a lot. Symmetry is important, especially when it comes to like longer term sort of patterns. So you could even see a really, really high run up. You could see like the Santa rally sort of thing, right? Where this sort of you could get maybe like a double top, or just not quite there. Like not quite a new high, but close. And again, that would be the greedy bears this time, trying to squeeze all the juice they can out of the stones. So you could see something like this, but that's well beyond the point, and that could that takes us to the end of November, but that's still a lot of ground to cover. So again, if we have like a much deeper cut like this, then it will take a lot longer to do something like that, and that would take us into December, and that might align really well with the Fed coming out and dropping a bomb and saying we're not going to lower rates. And then what you could see is again this Head and Shoulders pattern, if it does materialize. They are some of the most common patterns. So like you assume until it's invalidated, then you could see a much larger sort of correction. And then I think you could like if you zoom out, you could see like and we're talking like January here, like the tail end of December, but usually it's that week between Christmas and January where you get like a couple of those like light training days. That's where you get those like sneak attack sort of days. So I do think that we've gotten, was this like 60% or something like that since the April low? Like that's ridiculous. Taking 30% off of that, no big deal, right? We're still up for the year. So I want you guys to lose sight of something like that. Like the entire the amount that we have traversed here over the last couple of months has been truly incredible. It's really only happened in like, what is it, like 65 years or something like that. But the long story short of it is, we do have some room to go here. I think it's possible we could see something like like a revisit back to the 6,000s, and that was just back in June, right? So it's I mean, you got to laugh sometimes, but once the dam breaks here, it could turn into a flood. And as you guys remember from April, that's a very it's a very interesting time, right? A lot of people get beat up pretty bad. So anyways, that's kind of the short-term and longer-term sort of views. Any questions with that? Do I sound crazy? Please tell me. I should be committed. God, I've been staring at these charts for years and years and years, and every cycle, every bull bear cycle, you learn something new. And one of the things I think I've learned this year, or that has been truly humbling, is that these late stage bubbles, where they're just ripping up the space. Like I do think that this is our blow off top here, and this is like it doesn't go straight up like a meme stock. I mean, this is the indexes, right? And when you look at something like let's say sorry, son just walked in with a tablet, bothering me. But if you do look at this, if you do look at this, in it from a historical standpoint, like, I mean, look at this, it's huge. You could compare this to, something like 1999, right? But this only happened in a handful of months. And the same thing happened with 1999. So you get this huge run up, and when you compare it to, prior years like the COVID low, like look how far down that is. Like the low from COVID is, the S&P is like 2100, 2200. It's such a massive appreciation of wealth, or wealth, in quotes, that I think when this thing, truly does burst, I think a lot of people are going to be very surprised, especially the people, that are always crowing online about like, this is not the same as the last bubble because revenue actually, like the revenue matches. Yeah, okay, sure, it does, but there's something different with every bubble. This time you could have the revenue, but a lot of it could just be government spending and liquidity, and I think that's probably what most likely is going to be. Um, I also think that you might see like a really long-term sort of, like a megaphone pattern, which you saw um, like the third wave here in April, and you could have a correction. I think like 4,800 is the last one, but like 4,500 is probably reasonable, and that would still be not so bad. I mean, yeah, it'd be terrible for people's 401ks, especially if you had like Nvidia and tech stocks and stuff. But I still think that like you could see something like this. It's not out of it's not out of reason. I just think about like 2008 and how everybody was just shocked when they're looking at their statements that came, that quarter when they, like my parents, for example, was like 40% down. You're like, well, how did that happen? It happened like all in 2 months or 2.5 months, something like that. So, all right. Anyway, that's enough. That's enough of that ranting. Let me pull up the usual suspects here. Let me get gold. So, and don't get me wrong, like it would be, it sucked super bad to have a big deep recession because lots of people lose their jobs, a lot of people lose their savings. They don't know how to handle it. Times have been so good for so long that you get an entire generation of people that are just unequipped to deal with hardship like that. And I think it's going to be again, I'm not trying to be a doomsday prophet here, but if something like that does happen, it's not really like a soft landing. Like if we did it, the best thing we could do is chop for the next 10 years, and let PEs catch up with earnings and things like that, and let the economy kind of even out a little bit. But you can't really have a huge bubble of excess and then not have a massive correction after it. It's like you have all these zombie companies, all this crap that's been bloated, everywhere in every sector, and it needs to be expunged from the system. I don't know what other word to use for it. But, all right, so gold. So gold, I think, is still doing this ABC thing. I think it's gonna either head down to like the 38.50s, and it should. I mean, to be honest, like it had such a huge rip that this entire leg up has been just massive. I do think that it will make a higher high, especially if you have a lot of a lot of like selling in equities. Like people are going to wonder where they put their money. And crypto, I don't know if you guys follow Robert Ballin at all, but he had a very interesting post today, um, a very interesting analysis on how like the S&P is 0.92 correlated, which is like a super strong correlation with the S&P. So if crypto goes down, then the S&P is going to go down, and vice versa. Whether one leads or the other doesn't really matter. But there's a factor, like a multiplier of like 40 with the Bitcoin price, and that's what's so strong about the correlation. So what I found so interesting about that is you've got this, you've got all this bloodletting, like in in crypto, but it's not a fast sell off. So I think that this is sort of like the prequel, if you will, to what we might see that we kind of talked about, like that longer term scenario, like November into December. So with that, like gold should be able to rebound here up a little bit higher, and people are going to look for that store of value, and it's not going to be crypto. At least I don't think it's going to be crypto. So metals and commodities, I think, are going to be what catches the tail here. Same thing with silver. Silver's got this what kind of looks like a like a B wave, and I do think it maybe probably sell down to like 42 or 40 or something like that. let's see here. Oil. I feel like again, this has been kind of kept artificially low just because of all the all the Ukraine stuff that's been going on, and Russia and whatever. So long story short, I think that we'll probably see some sort of you know like there'll be some price appreciation, but I don't think it's going to be like crazy. Let's go nuts. Like gas can sometimes. So I think it might just be like a short sort of thing. But we've had a lot of selling with oil. Typically it does happen. There's a precursor or something like like a recession or just a bigger dip with equities, but just not sure yet. I think that we will see some sort of appreciation, but having it get above 70 or something is probably unrealistic at this time. Gas, I think, has a lot of room to run. I think that if you look at it from an adjusted contract basis, there's still a lot of bottoming that's been happening. If you change the contract to just adjust for no rolls at all, you still have a very large sort of run up that you could see. But again, gas is a little bit weird to trade. The contracts are all over the place in the very short term. So I guess I always like to try to keep it adjusted, but you've got a lot of these buy signals firing here, and I think that you're seeing the same thing that you're seeing with oil, which is like gas has been kept artificially low because that's what funds the Ukraine war effort for Russia. So I think that it's just part of the larger order of things. Okay, so stocks. This one kind of looks like a pretty decent B wave. You could make the argument. I'll just try to make this short and sweet because I don't want to overthink it. Tend to do that, and it doesn't work sometimes. So it kind of looks like an ugly channel, but it's still a channel. You could see like this could be like a little B wave down here, and then you could see a higher high to like this 316 or whatever I was talking about before. Once it kind of expands beyond the channel lines and it starts to look more like a megaphone, then the probability declines significantly that it's actually going to do that. What I think you might see that's more realistic here is you will probably see a retest of the 50. Like you could see something like this, which would be very sweet if you held some stocks. Like you could see a test of like this 278, or maybe because by then it'll pull the 50 up with it, so you could see like the trend line kind of like that, and the intersection point probably be around like that, the 280s to 285, that kind of thing, depending on the timing of it. But you can still see that there's a lot of volume here. There was a lot of selling that happened, like huge sells, but the volume's kind of leveling off. And today we just had a general run up like everything else. Bitcoin, like I said before, this one I think we're going to see like another wave down. It did practically nothing today. I mean, yeah, okay, it went up a little bit, but like so did everything else. It just kind of kept pace, but it didn't really jump off the page at me. So for now, projection is down. I think it's going to be like a 96,500 sort of thing before you get some sort of measurable bounce on the long-term trend line. Nvidia here is a little bit difficult. I think you might see maybe like 192 first before you see anything higher. Because Nvidia, I mean, they're gonna, they'll probably do something like this, or you might have a deeper cut, maybe like that. But Nvidia's got to blow off some steam. I mean, they got some earnings coming up here. When is that? Okay, on the 19th. Yeah, so it's coming up soon. So you might just see, like, I mean, they're going to blast it out of the water. I mean, 37% of the revenue is government contracts, and it's just 2 customers. So that's like guaranteed revenue. So if they can perform on top line, much better than everybody else, then they should see some sort of bounce up like this. So I'm not quite sure. You might even see a deeper cut like this, but for the most part, just keep an eye on it. I mean, I'm not buying it, that's for sure. But stranger things have happened. Tesla kind of reclaimed its trend line here today. It's not unexpected, just because it's been bullish for a while. It's kind of hard to read. It's been bullish for a while, but even if it does make a new high, like let's say like 485 or something like that, you're getting real close to that like all-time high for Tesla. And you've had a couple of really crappy earnings reports. So it's like, all ships rise and fall with the tide. So Tesla's kind of propping up the market. Same thing with Nvidia. Same thing with all the other mega caps like normal. So now let's talk about MSTR. So MSTR is coming up on a big support point right around this 240 to 230 level, or 230 kind of zone. I think what I would like to do is I think I will add maybe just like a 50% short hedge for my MSTU. Even though it's only, it's 3 units, so it's not anything crazy like 6 units like long oil. I still think it's definitely like a hedgeable sort of thing, especially if other equities are gonna take a dive, and if Bitcoin looks like it's gonna take one more leg lower, we might be able to you might be able to do something like this where kind of dips and hits that 230, kind of grinds a little bit, and maybe it finds some support, and then maybe we see that. So not sure, but we'll see. Any questions, comments, concerns? You sufficiently bored to death from all this talking? Great. My wife's within earshot. I'm sure she's tired of hearing about this crap. All right, guys. Well, let me know if you have any other questions here. I'm happy to answer. Send me a DM or something like that, or post it in chat.